bought it. It was super expensive. But right after everything normalized again, guess what? Nobody wanted that brown bamboo paper towel product. So there was more supply of that product than demand, and it went on sale. And I am not too proud to admit there are still 6 cases of that in my pantry because it was buy one, get 3 free. So I loaded my trunk up with bamboo paper towels and toilet tissue that was on sale. But my point in that is supply has to outpace demand before prices go down, and the cost of money in and of itself is not enough at this juncture to push down demand. At 5%, people are still lining up to borrow money. So think about Bentleys. Bentleys don't go on sale. That's because there's never a flood of them in the market. So supply and demand control the cost of something much more than the actual cost of the money ever will. So if you're going to be looking for a pullback in pricing or that crash that you may think is coming, I personally don't. But if you do, look to inventory levels and time on market as an indicator of that happening, not necessarily the cost of money. And who knows, if interest rates keep soaring, maybe it will damper demand to the point that there is more supply. But we first have to level out before we even get upside down in a supply situation. So supply and demand govern prices. That's where I was going with that. So we're going to jump into some questions. I think Dom has given me the thumbs up that we've got one teed up. What do we have, Dom?
We have Carol that emailed us. She's asking, I'm just starting to look for an investment property. Is there a good website to find foreclosure houses, or maybe one that's going into foreclosure?
Hey, Carol, that's a great question. And yeah, thanks, Dom. So here's what happens whenever we get into a rapidly appreciating cycle is everybody wants to be investors. And Carol, I'm not discouraging you. It's a wonderful opportunity. I'd like to learn a little bit more about your circumstance. Are you thinking of flipping properties, or are you thinking of buying and renting them, becoming a landlord? Because there are 2 very different strategies when acquiring those different investment opportunities. So, but to answer your question, if you're looking for HUD foreclosures, which is typically going to be the more entry-level house, entry-level price point, the website for HUD's foreclosures is HUDhomestore.com, and you will need an agent to register to bid for you on those homes. But yeah, HUD Home Store is where the FHA homes are liquidated, if you will. So that would be a place to look. Auction.com handles some of the, I believe it's auction.com. You know what? If it's not, text or email me, or I'll get you the, I believe it's called auction.com, handles some of the Fannie and Freddie foreclosures. And then I know Zillow has that, likely to go into foreclosure category. I haven't seen that be too accurate, because I think what it does, I think it picks up list pendants from the tax rolls and advertises those as, and they are potential foreclosures. But I think the reality of that particular person is they have so much equity that they'll most likely sell at retail, or if they're in the position to, refinance. But that's another place to look. But HUD Home Store is where the FHA foreclosures are sold. And back to the difference in mindset and strategy around those. So if you're thinking of flipping, be cautious, because now is a bit of a challenging time to flip properties because of the cost of labor and material that goes into the construction trades. So there are many, many reports and news pieces that I'm seeing on, stations like CNN, or their website, CNN and CNBC, where they're talking about flippers who don't have the horsepower to finish the project because the expenses are more than they imagined. I mean, I watched a story the other day where the elevator company is putting 3 elevators in this apartment building, and elevator 1 went in, elevator 2 was 20% more because of the cost of materials, and elevator 3 was 17% more than elevator 2. So if you're flipping, I would be cautious just to have a really good handle on your labor and construction costs. I know we were looking at some remodeling projects at our home, and we were surprised by, the cost just walking through Home Depot and making a very basic materials list. And so flipping, I would just be mindful of that cost, because I believe a lot of people are underestimating it. And home buyers and home inspectors are watching out for the lipstick on a pig type flips. The inspectors talk about how, the granite countertops are not enough to overlook the electrical problems or the air conditioning unit that needs to be replaced. So, but if you're buying with the intent to rent it, I think it's an amazing, amazing market to do that in. And I don't necessarily think it's fair what's happening in the rent market right now. I certainly don't. I know Dom and I talked about it a week or two ago. His rent, even his went up, and he's a master negotiator from hanging around with me. And he's getting mortgage ready, by the way, folks. This guy has his stuff together. He's not a renter because he has to. He's got a master plan. But nonetheless, if you're going to buy to rent, I think it's an amazing opportunity, because we all see what's happening with rent prices, and the home values are supporting rent prices, right? Because it's what are you going to do? Are you going to buy or are you going to rent? So people have less choice and less option, and it's putting more demand even in the rental market. And we see the stories where institutional investors are coming in and buying single family homes and renting them out. So the DSCR loan product that we talk about all the time is an awesome loan product for even first time investors. And I think that sounds about like what your category might be as a first-time investor, and I'd be happy to walk you through that DSCR program if you're buying rentals. So anyway, I hear the police sirens rolling up behind me. That means we're heading into a break. On the other side of this break, we'll take more of your questions, and get those questions to us via the Anytime Hotline. That's 561-291-8569. That's 561-291-8569. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. I host the Mr. Mortgage Show. We do this little mortgage party every weekend at this time on this station, or if you're listening to us on the podcast replays, that's awesome. And share that, would you? We're trying to spread the word. We're on all the podcast networks. If you want to check out some back episodes, just go to Google and type in the Mr. Mortgage Show. Just search us. You'll find us. We pop up everywhere. But yeah, podcast is now up and live and just about everywhere. Matter of fact, I had a really cool experience. A friend of mine was traveling and he listened to us live actually on the iHeart app in Ecuador. So he was in the mountains of Ecuador listening to Dom and I talk about mortgages and real estate. So that was a pretty cool experience. So the global Mr. Mortgage movement is underway. No, I'm not going to let my ego get the better of me, but I just thought that was a cool experience. So that's 24/7 on demand, the Mr. Mortgage Show. Find us on the podcast networks. But yeah, shoot your questions to us, 561-291-8569. 561-291-8569, or visit the website. That's www.mr.mortgage, no .com, just mr.mortgage. So, hey, Carol, I hope that answered your question. I don't want to poo-poo you being a first-time investor because there is some amazing opportunity out there. Just get a good handle on your material and labor costs if you're going to flip. But that DSCR loan is an amazing product for buying and holding an investment property, especially for a first timer. So I just wanted to throw that out there. But yeah, let's keep this party rolling. Let's get some more questions underway. Dom, what do we have?
We have David sent in a text to us. He's asking, I'm getting ready to apply and calculating my debt ratios. I co-signed for my son's car. He pays the payment, but it's on my credit. Do I count that as my debt?
Hey, David, that's a great question, my man. And we see a lot of that, right? So, yes. So here's the thing. There's two ways to do this, and 12 months is the magic number. So if your son has been making the payments for 12 months or more, and we can document that. So if he's making the payment from his account, which we always recommend, and we can go back and either look at the previous 12 months bank statements, or if he's old fashioned and can get us the canceled checks, if we can document that he's been making the payment for at least 12 months, then we don't have to count that in your debt ratios. And it sounds like you probably were online running your ratios, which is awesome that you're one step ahead of the game. But if that's not the case and it hasn't been a year, or he's giving you cash, or half the payment on this week and half the payment next week, and it's inconsistent, and you're making the payment because you don't want your credit to be affected, then it's going to be less likely that we can remove that from your debt ratios, unless he's giving you, let's say the payment's $381.76. If he's giving you a check for $381.76 every month, but you're making the payment, we can document that he's paying it in that instance. So we need to look at him having made that payment for the last 12 months for that to be removed from your debt ratio. And while we're talking about that, I want to throw out a situation that we see a lot of, because that also goes to the person who is self-employed, or they're self-employed. They own a company, and their company pays for their car. So you're a contractor, or a salesperson, doesn't matter what you are. You decide, I'm going to go buy a new car, but I get a better interest rate if I buy it in my name, and I'll just use my company account to make the payments. If you've been doing that for 12 months, then that's not your debt, that's the company's debt. We have to, it's the same thing like David's son. We have to document that the company's been making the payment for 12 months. Here's where it gets very frustrating for everybody, and me included. And I wish there was a way around it. And we're trying to accomplish a way around it. If we figure this out, we'll let everybody know. And there may be a guideline change in the future that works around this instance. But let's say you're a contractor and you buy the trucks in your name. You got great personal credit, and the company pays the trucks. They have for years. You've always done it this way. Well, now you're going to buy a new truck. You trade in the old truck, or the lease is up and you buy a new truck. That 12 months starts over with that new vehicle. So you have to wait a new 12 months. You have on that new car payment, that starts that cycle all over again. So if you're in the mortgage process, and I've had this happen on more than one occasion, because logically it makes sense. The company's still paying my car. The company has always paid my car. Why now do I have to show that it's been paying this car for 12 months? And again, we argue this case with the underwriters all the time. But if you're about to make a purchase and you're considering getting a new vehicle, in that circumstance, wait if you can. Because if the company is paying for your current car and you can show the company's paying for your current car, then we don't have to count it in your ratios. The minute you go grab that new car and there's a new car payment, a new loan on your credit report, that starts that clock all over again. And I know it doesn't